Hello everyone, welcome back to Make Money Online. Today we'll be talking about events surrounding NIO stock for the upcoming week. Watch this video till the end to know how you can take advantage of the current dip in NIO stock price to prepare for a possible surge next week. Since Tesla set the tune for the revival of the electric vehicle industry, other automaking giants such as Nissan have surfed the waves and produced some of the highly sought-after vehicles, such as the Nissan Leaf. Whether it's a hybrid, plug-in hybrid, or all-electric, the demand for electric drive vehicles has continued to climb as prices drop and consumers look for ways to save money at the pump. The industry has experienced upheavals in the second half of the 20th century. It showed the world the promise of technology. This sponsored the revival of the electric vehicle in 2021. The industry has experienced immense growth in sales as more people are enlightened about the benefits of EVs. As we all know, wherever there is new technology, Asian countries are never left behind. China has seen the rise of three giants in the EV market, namely NIO, XPeng Inc., and Li Auto Inc. Of these three, NIO is the most outstanding. NIO became public on November 14th, and afterward, several companies invested in NIO. Its first model was also unveiled on the day of its launch. Before this, Tesla had already formed quite the institution in Chinese markets, selling a great number of vehicles. The arrival of NIO was bound to shake things up a bit, as it didn't just challenge Tesla in the Chinese market, it also made it to a top listing in the New York Stock Exchange, and that put the company on the map. It also aims to offer automobile charging solutions that comprise Power Swap, Power Express, Power Home, and Power Mobile Service. The company plans to expand its lineup with a couple of electric sedans starting in 2021. Backers of NIO include Chinese tech giants Tencent and Baidu. The company struggled in its first year as preliminary attempts at sales failed woefully. NIO was strapped for cash and close to bankruptcy in 2019 after seeing sales crumble and then dealing with enforced factory shutdowns during coronavirus. In late April 2020, NIO received funding from new Chinese investors worth approximately $1 billion. This was provided to help the company overcome its budding sales problem. NIO stock was heavily bought by institutional investors when it launched. Its initial public offering stock traded well with decent institutional backing, and this intervention brought it out of the rut that it was in. The market price of a single NIO car was pretty expensive, and it also met resistance when it comes to market acceptability, even in its home country. Tesla had made such an impact on the international market by revolutionizing the general automaking industry by succeeding where EVs in the past have failed. Of course, it would be difficult to unseat the giant. NIO stock went public at $6 in September 2018. Since then, it formed a sort of mixed market in China alongside local rivals and Tesla. Electric car demand kept increasing in China, thereby benefiting NIO, Tesla, as well as other local manufacturers. Sales of new energy vehicles, which includes electric cars, more than doubled last month to 169,000 units, according to China Passenger Car Association. In May 2018, NIO opened its first battery swap station in Shenzhen, Guangdong. The district was known as the Power Swap Station. NIO launched the battery as a service module via the contribution of some corporate investors, who bought up to 25% equity. This deal helped reduce the price of NIO vehicles by 25%. NIO distinguishes itself from competitors by enabling consumers to swap depleted batteries for new, fully charged ones at 143 automated battery swapping stations located in 64 cities. The battery as a service model gives drivers the ability to get the latest battery technology and to save time they would have spent at a charging station. In September 2018, the company went public in an initial public offering, filed for $1.8 billion on the New York Stock Exchange. NIO's share sale adds to what is already a record year for Chinese capital raising on US exchanges, even as relations between the world's two biggest economies are at a low ebb. US equity capital markets are having a blistering end to the year, with billions of dollars of stock being sold through initial public offerings and follow-ons. NIO joined the rush for fundraising among new energy vehicle manufacturers, capitalizing on an 11-fold increase in its share price this year to boost its coffers. NIO sold a total of 14,169 vehicles. This trend shows that the company was set up for improved sales and it did fairly well despite the restrictions. The manufacturer is selling 60 million American depository shares in a follow-on offering and has the option to sell another 9 million, according to a statement. Based on its latest share price of $45.22, the car maker could raise as much as $2.7 billion, excluding a green shoe option. The stock fell 6.3% in pre-market trading last week. Rising electric car demand has pushed up manufacturers' shares this year, prompting them to sell more stock to fuel their growth. Chinese rival XPeng Inc. raised $2.16 billion in an upsized share sale. A week earlier, Li Auto Inc. sold $1.36 billion of new stock, while industry leader Tesla Inc. is raising as much as $5 billion in its third stock offering this year. NIO has a market cap of about $61.598 billion, and its price share is around $45.22, which is about 2.75% higher than its previous valuation. NIO stock climbed up to 23% on October 14th after JP Morgan analyst Nick Lai raised his rating to buy and his price target to $40. NIO shares have stayed right around the $26 to $28 level since the upgrade. NIO stock performed excellently in October 2020, with its total sales doubling compared to its performance in October 2019. NIO stock has been a real champion this year, rallying more than 1,500% from the March low to the high achieved in October. It is on a bull trend, betting on its continued momentum. NIO stock experienced a breakout in September 2020. Its shares jumped over the $20.5 mark to $21 area, then consolidated in a surprisingly tight trading range for 10 sessions. This was what preceded the high in October. The pattern extended into November, even as the trend of the share took on different shapes, such as wedge and ascending triangle. Nonetheless, the shares put in a bullish consolidation pattern and then surged, then powered higher to the upside. It was suggested that the 20-day EMA would keep guiding the shares higher, while the 50-day moving average is expected to act as support once it's tested on the downside. This chart shows the long-term prediction of NIO stock from October 2020 to March 2021. The stock price has been on a bullish run starting in October, and it rose significantly, experiencing dips along the way as it rose. It peaked at $56.31, which led to a correction between 50 EMA and 200 EMA, after which it dipped down to about $47.76, where it stabilized on December 2nd. The forward run is predicted to continue to the highlighted column over February 2021, with strong backing at $35.91, and the share price peaking at $57.28. For these reasons, and combined with the short-term surge in the share price, the correction period acts to create an opportunity. Should NIO stock break out over this level, bulls have a new point of reference as possible support. Further, a dip from this level into a lower area gives investors a dip buying opportunity for an eventual retest, provided the pullback area indeed acts as support. If you've been waiting to buy NIO stocks, this is a great time to dig into that idea. The truth is, you might not have another opportunity to buy into a dip this low again. The stakes are higher in the international EV market, with Tesla rearing up, bulldozing ahead of the chasing pack with close to 1,000% boosts in stocks, despite the incursion of local Chinese EV makers. NIO has a war on both ends, internationally and locally. A chase with Tesla on the front page and a struggle with other rivals in its Chinese local EV market. It goes without saying that despite rising geopolitical tensions between the US and China, all three EV makers are now listed in the US, but their stock market rides have been pretty volatile. NIO shares have been in recovery since April, capped by a 22.57% jump on October 14th. XPeng and Li Auto's share prices have seesawed since they went public this year. Both companies' shares surged more than 40% overnight in their US stock market debuts, and have since lost more than a fifth of their peak values. NIO, however, boasts the deepest pockets and boldest business plan. XPeng is backed by Alibaba and has its targets set on self-driving technology, and began delivering cars just 6 months after NIO. Its vehicles have been criticized for being a Tesla lookalike. Li Auto is more practical, solving the most urgent issues of early EV adopters, and was the last of the three to begin deliveries in late 2019. Investors have doubted the viability of the market as a whole and questioned Chinese EV makers' prospects. Even in their home market, these companies are dwarfed by Tesla. The Chinese government is bolstering a surge in EV adoption and clean energy vehicles to grab a quarter of total car sales by 2025. As the world's biggest auto market recovers from the COVID-19 pandemic, analysts expect strong long-term growth for Chinese EV makers, with NIO and Li Auto potentially expanding their lead among the homegrown players. As costly projects come to life, Chinese EV makers need to continually raise capital to keep funding their ambitions. Any gaps in financing could mean being left behind. There is still great room for valuation growth. We hope you enjoyed this video. Don't forget to give us a thumbs up, subscribe, and click on the notification bell. What else would you like to know about NEO stock? Let us know in the comments section. And as always, thanks for watching.